We have with us Gopal Balachandran, Chief Financial Officer, ICICI Lombard, and we will discuss about Q1, which has been a mixed set of numbers. Welcome to ET Now. My first question to you will be, Motor OD saw good growth, but commercial vehicle premiums declined 16.5%. Is this due to market slowdown, pricing pressure, or underwriting strategy?
So I think it's a combination of all the factors that you rightly described. Again, while I gave the industry combined ratios in response to the earlier question, but if you look at within that for the industry, the combined ratios is currently running at about 124%. This is for the entire motor as a category. So hence, to that extent, how long can industry continue to lose so much of money is something that will be closely watched for. And therefore, the numbers have to be looked at in the context of where the market is operating at. Now, within that, I think one of the other things that the market has equally been looking at is in the context of motor third party. At an industry level, we have obviously kind of sought a price increase. How much of that price increase and at what point of time that price notification happens, I think that is something that we will closely watch for. And to that extent, that should also kind of help the overall market in terms of improved pricing. The third factor that will also be a determinant in the context of motor for the industry will be in the context of financial year 25-26 happens to be the third year of the glide path that the regulator had stipulated for companies to make sure that they are operating within the limits on expenses of management. Based on the FY25 numbers that has been disclosed by all companies, still almost about 50% of the number of players in the market are operating with expense of management above the regulatory threshold. And therefore, all of those companies have to take measures to bring down their expense of management, which will be very, very positive from an industry standpoint. From an ICICI Lombard standpoint, we have always run our expense of management well within the limits that has been laid down by regulation. And hence, to that extent, I think we believe we are again in a very, very sweet spot and therefore well positioned to again capture the opportunity as and when some of these changes take place.
All right, Mr. Balachandran, now company's retail market share stood at almost 3.5% for quarter one, up from 2.9%. Now, I want to understand what is the focus shifting from motor to health, or motor remains the most important segment in terms of your focus now?
So again, that's something that keeps coming to us quite often. The beauty of the general insurance business, particularly the business that ICICI Lombard is into, is we have always kind of talked about being a multi-product, multi-distribution company. And therefore, to that extent, that obviously aids growth in different segments of the businesses at different points of time. And therefore, to that extent, if you were to ask us, retail health is a very, very important and a preferred segment of opportunity that ICICI Lombard sees. And you are right. I think that's a segment where we have been able to kind of move the needle in terms of our market share, which generally has kind of hovered around historically at a level slightly less than 3%. And as we speak, we have been able to end the quarter with a market share of 3.5%. And that's a segment where we will continue to stay invested both in expanding our footprint in terms of distribution. And equally, I think we will be able to come out with product offerings which are in the interest of customers/policyholders. For example, the product launch that we did on Elevate in Q2 last year, that has been kind of well received and accepted insofar as customers are concerned. So definitely retail health will continue to be one of the fastest growing segments for ICICI Lombard, and it will be one of the preferred segments. Not to say that for us, motor is not important. For us, all the lines are equally important. We obviously keep looking at what is the pricing environment, what is the combined ratio environment that is playing through at different segments within the market. And as I said, currently in the context of motor, the industry is running at a combined ratio of 124%, which is obviously a lot of money to lose. And that's the reason why we are a bit guarded. And obviously, market cannot continue to afford to operate at these levels. Things will start to change, and when the cycle reverses, ICICI Lombard is well positioned to capture those opportunities.
Okay, so the retail health market share will keep growing. However, the motor share remains important as well. Mr. Balachandran, given the change in the accounting for long-term products, how should investors assess your growth in FY26 and what internal metrics are you tracking to measure real business traction?
Yeah, unfortunately, I think this is consequent to a change in regulation that happened in October last year, which again, I think the change in guidelines is right in the right interest. So that's the reason why in all our communications that we make consequent to the financial results announcement, we also put out the numbers so that readers of our financial results are able to kind of look at it on a like-to-like basis. Just to again put this in context, from a growth standpoint, which you initially asked, where at an aggregate level for ICICI Lombard, the growth was at, let's say, 0.6%. That number on an N basis would have looked like almost a growth of about 4.8%. But when it comes to bottom line, which is combined ratios, the combined ratio on an N basis for quarter one last year, that number was 102.3%. The same number on a like-to-like basis in quarter one of the current year on an N basis, that number stands at about 102.2. So we have actually been able to make a marginal improvement in the combined, pretty much on the lines as what we have been doing every year. And that is exactly the directional trend that one wants to take. We want to continue to stay focused on driving profitable growth. And in that context, from an ICICI Lombard standpoint, you should continue to see us exhibiting a better outcome insofar as combined ratios are concerned.
Right, Mr. Balachandran, you just spoke about the road to profitability, but 67.5% of cashless health authorizations were done via AI in Q1. What further innovations are in the pipeline to enhance claims efficiency and customer experience? What is the latest update on common impanelment as well?
So I think from an ICICI Lombard standpoint, I think we have been a firm believer of use of digital, and therefore to that extent, and that includes across the three aspects of our policy sourcing, claim settlement, and even our internal processes. And if you ask us, I think that the product that we kind of largely offer to customers is predominantly claim service, and therefore to that extent, there is a lot that we can do in the context of enhancing the customer experience. And that is what is getting reflected in terms of outcome. I think particularly when you look at our customer satisfaction scores, when you look at our NPS scores, clearly customers have been able to kind of possibly appreciate the service that we are able to exhibit to them. And obviously, we will continue to keep seeing if we can have more number of service providers being able to offer better facility to the customers. More importantly, the good news is the regulator has done a great job on this in terms of making sure that the time that it takes for an authorization request to be issued, they have put a time limit of 1 hour, and equally they have put a time limit of 3 hours insofar as the discharge is concerned. When you look at this in the context of ICICI Lombard, our timelines for issuing an authorization for majority of the procedures, it actually relative to the time limit of 1 hour, most of the procedures timelines that we are able to exhibit is almost less than 90 seconds. So hence we have been able to swiftly kind of respond through use of various technology interventions, and in the process create a better experience for the customer. The same is the case where the regulator has stipulated a timeline of 3 hours. I think we have been able to kind of again do better in terms of service is concerned. So again, a lot more to do, but at least relative to the market, I think we are kind of fairly well positioned, and that's largely getting reflected in our satisfaction scores of customers.
All right, that's how it sounds like, Mr. Balachandran. So a lot of focus on making the claim process smooth. But then having said that, now in light of increasing catastrophic events, how is ICICI Lombard enhancing its reinsurance strategy and cat risk management in FY26?
From an ICICI Lombard standpoint, we are absolutely cognizant of this particular aspect. And that's the reason with respect to every risk that we assume, there is obviously a lot of guardrails or filters that we apply right at the stage of underwriting to make sure that we do fair levels of pre-risk inspections so that we understand the risk that we are assuming. And therefore, to that extent, we know for sure what is a likely loss that we are likely to be subjected to in the event of a loss. So even at a stage of underwriting, I think there's a lot of filter that we apply. Now, coming back to your point on reinsurance, very, very valid. And that's the reason, again, both on what we have tried to do is because reinsurers are also providers of capital. From an ICICI Lombard standpoint, we have consciously chosen to work only with a high quality panel of reinsurers whose credit rating from a foreign reinsurance rating standpoint are A minus and above. The regulatory stipulation allows us to work with reinsurers which are rated triple B minus and above. So hence, in that context, again, very, very conscious of the quality of reinsurers whom we are working with. And two, what we also do in terms of risk protection is to make sure that in the event if there is a single large loss, or to your point on in the event if there is a catastrophic or let's say natural loss event happening, like let's say a flood or a typhoon or a cyclone, etc., etc. What we have done is to take a level of reinsurance protection such that at any point of time, so far as earnings are concerned, the risk is capped because the rest of the losses will possibly be made good by the reinsurer. And even in the event of a catastrophic loss, we have been able to kind of again put in a similar proposition. Technically, in insurance parlance, what we buy on the catastrophic side is a 1 in year, 250-year protection, which we believe is very, very reasonable and conservative for the quality of the book that we're underwriting. And hence, to that extent, very, very conscious and are very absolutely mindful of the risk that we are exposed to given the increased incidences of catastrophes.
Mr. Balachandran, taking it ahead and talking about your pricing strategy, any price increase taken in health portfolio? Is there any inspection which has happened at ICICI Lombard by IRDAI related to health insurance?
I think from a regulatory standpoint, I think the regulator has obviously been, I think thanks to them over the last 2-3 years in specific, I think what they have been able to come out with is with a lot of changes, which is rightfully so in the interest of customers. And to that extent, there has been various master circulars that they have been issuing last year, not only in the field of health, but across different categories of businesses. And obviously, they expect the overall market to make sure that their processes and service turnarounds are pretty much in line with these regulatory stipulations. So every company goes through the process to make sure that there is a validation of what the regulator has put out. And therefore, to that extent, even ICICI Lombard has been through the process of inspection. The way the process works is whenever there is an inspection that happens, and to that extent, the regulator then subsequently could give us their own observations, which we will respond to, and then the natural process subsequently follows. So hence, that's the process. And therefore, however, from an ICICI Lombard standpoint, I think what we stand for is obviously we kind of exhibit high levels of corporate governance and the need for us to be in compliance with the regulatory stipulations. And therefore, to that extent, all our processes, all our, as I said, service standards are geared to make sure that we are in compliance with the regulatory stipulations.
Thank you, Mr. Balachandran, for joining at this hour and explaining the rationale behind the Q1 numbers.